If you're thinking about day trading and getting started with trading stocks, this video is going to give you a few things to consider before you get started. Day trading is considered buying and selling stocks within one single day. So if you buy it at any point, you make sure and sell it before the day is over. But we're going to use it loosely speaking because I think a lot of people, when they say they're getting into day trading, they just mean they're starting to trade stocks. So that's what I'm going to cover in this video. If you've been thinking about this and really want to get started, I want you to ask yourself why. Are you doing this because you want to have some profits rapidly, or is this a long-term strategy that you want to start using to get invested? If you do want to start trading to make large, quick profits, then let's break that down first. I'm sure you've heard that if anything is too good to be true, it probably is. And that's especially true when it comes to trading stocks. I see so many people that want to get into the next best thing, and they're really hoping to invest a little bit of money and have that turn into these gigantic profits for them. You also have to consider, if it was that easy to turn these big profits, then everyone would be doing it. Instead, we see people selling courses on how to do it. Just because somebody's selling a course on trading doesn't mean that they're necessarily making money trading stocks anyway. I took a look at a couple of these courses offered online, and here's the fine print of one of them. But before we get into that, be sure to hit that like button because it really supports my channel. So let's pull that up. And as you can see, it says these results are not likely. Most people that are having these experiences, it's a rare thing. And everyone that gets into a course like this or starts to day trade, they start dreaming big. They think of like, well, what if this and what if that? It's not the reality for most people. Like anything, what you put into it, you get out of it. This is a whole new skill set you'll have to learn. It's not something you're going to be able to read a few books on, take a course, and then expect to do it. You're probably going to have a lot of failures along the way. The people that have actually made large profits, the few people that have, it's not something that they've done overnight. They really took a long time to do it, and we don't know what their losses are in years leading up to their massive gains. So they could be showing a really profitable year or 2 or 3 years, but they maybe aren't showing years prior to that of them losing money. If you do have a passion for this and you really want to get into it because it's something that you think is likely to just be a skill set you want to learn, you want to dedicate yourself to, and you just want to be involved in it because you love it and you're passionate about it, that's okay. I mean, there are obviously active traders out there for a reason, but remember that 90% of people that do trade aren't successful in doing so. You do have to ask yourself what you're risking. If you are putting your finances at risk to try day trading, then that's something you really have to consider. Is it worth it? Because if you take a risk at something with large chances of failure, you don't want to end up really hurting yourself so bad that you get into debt or you go into collection or you have all these financial problems that could have been avoided if you traded in a different way. That's just the buy and hold strategy, because as we've seen statistically, people that try to trade and outperform the market, they do not have success. Here are the percentages of mutual fund managers whose job is to create investments that do perform better than just buying the market, because they charge a fee for their investment. And why would you get into that investment and pay that fee when you could just get into the market at a really discounted rate compared to the money manager? So the money manager's job is to add some value and some outperformance to the individual stock market if it's a stock mutual fund, say for example. And if they're not providing that value, which over the long run, as you can see here, they're not, then why are we getting invested like that? And why are we trying to invest like that ourselves? And when we go out and buy a bunch of individual stocks ourselves, then we could end up in that same boat. We're almost saying, I think these are all going to do better than the market as a whole, which may or may not be the case. But if money managers can't pick stocks that are going to outperform the index, then you have to ask yourself, what makes you think you're going to be able to do so? And that's not to be harsh or anything. And I do enjoy investing in stocks, and I encourage people to invest in stocks, but not as your primary strategy. If you did want to day trade or have some stocks, do it with 20% or less of your overall investable assets. Another thing I want you to consider is if you're buying something, someone else is selling that same position. If you're selling, someone else is buying. It's really difficult to always be on the winning side of that transaction. There's just a lot of mind games that happen when people start trading, and I've seen people get into a lot of trouble because it kind of gets into that gambling mentality, like, one more shot, one more try, let me try this. And then sometimes they'll start leveraging their account. They'll use borrowed money to invest to try to save themselves from this hole that they've gotten into, and it just escalates. It's really not a good place to be, and I've seen a lot of clients get into this trap, and that's why I want to share this with you. I know it's really appealing to get out there and have our money have these rapid returns and start growing for us, but going back to basics, if it's too good to be true, it probably is, and having some patience with your investments will really add a lot of value in the long run. As boring as that sounds, statistically, that is just the truth. If you still really do want to get involved in day trading and your passion is just bursting at the seams to get going with this, I would highly suggest that you get started with paper trading. They're fake accounts, or it's like paper money, fake money that you can use electronically to trade and kind of test your skills. Get used to this, start warming up to it, get used to the ups and the downs and see how things move before you actually invest your family's cash or your personal money. I'll put a link below to a couple of paper trading accounts that you could use. And if you are starting with real money, start small and don't get ahead of yourself. If you have a good win, it doesn't mean that's gonna continue. That's what happens sometimes. People get really confident because they'll have a couple of good wins and then they'll think that this is easy and they can do it, and then they'll just calculate what they could have done if they invested more, and then they'll invest more, and then the opposite happens. So when you do find yourself having a gain or having a rapid increase, it's probably a lot more to do with luck and timing than it is with actual skill set, because these things can't be repeated on a regular basis. If that were the case, then yeah, that would be skill. But most of the time, over time, we see that when you did have good wins, it really had a lot to do with just buying at the right time, and you can't always do that. If you're getting into trading, I would suggest that you also get into an index or an ETF that uses the same types of stocks that you're investing in on your trading side. If you're investing in large, well-known companies, then you could get into the SPY or the VOO. These are both S&P 500 index funds or ETFs. They just own all 500 of the stocks that are in the S&P 500. So you can see how am I doing compared to just owning this individual position. If you are having some success with trading individual stocks, you want to look at it compared to the index and say, is the time that I invest in trading these individual stocks, the research, the monitoring, the headaches of watching it go up and down, is that worth the time and the emotional stake invested in it? Or is it better to just buy this index and hold it and not have to do all the other things that you have to do if you're trading individual stocks? Because it's not just money that you're investing, you're also investing your time, and time, as we know, is very, very valuable. You might be taking time away from your family to do this, or just taking time away from earning money in a different way that you could invest in a long-term strategy. Let me know in the comments below if you have any questions. If you want some guidance on creating your own portfolio, take a look at these two videos because I do offer some tips and other things to consider as you're getting started. Don't forget to subscribe if you're new here, and I'll see you in the next one. Bye.